Hello and welcome to week 17 analysis session. Today is a Monday. We did have a holiday, not a lot of activity except for the Chinese yuan releasing the interest rates for the 1 year at 3.1% and for the 5 year loan prime rate at 3.6%. IMF meetings did kick off today and it's going to run through the entire week, and we'll want to see what happens at the end of the meetings. Tomorrow being a Tuesday, we do anticipate ECB President Lagarde, who's due to speak, especially after the euro did lower the interest rates to 420 basis points last week. Now, this is going to have an impact on Wednesday's news releases, whereby we do anticipate a lot of activity in the Eurozone, starting off with French flash manufacturing PMI at 10:15. Then at 11 a.m., we do anticipate flash manufacturing PMI for the total Eurozone after German flash manufacturing PMI. 11:30 a.m., flash manufacturing also for the British pound. The day is going to conclude with US dollar flash manufacturing PMI at 4:45 p.m., while we do have new home sales at exactly 5 p.m. On Thursday, unemployment claims over the past few releases, whereby people have been maintaining their jobs in the United States. And we will want to see if the forecast is going to come around the 222,000 jobs that it is being targeted. It's going to be New Zealand bank holiday in memory of Anzac Day. Also, the following day, Friday, for the Australian dollar. The week is going to conclude with retail sales for the British pound at exactly 9 a.m. UTC plus 3. Then later on in the day, we do have retail sales for Canada. Moving on to the commitment of traders, this is very interesting to note because look at managed money. We did see almost 6,993 positions being offloaded from longs and only 861 positions being offloaded from the short positions. Now, this is very interesting to note because commodities right now are considered a safe haven, and we will want to see how these numbers are going to affect price action in the near future. But looking at silver, we did see 333 positions being added to long and 534 positions being offloaded from the short positions. Now, if we can go to the financials, looking at the Canadian dollar, this is very interesting to note, whereby we did see almost 20,571 positions being offloaded from shorts and 1,655 long positions being added. When we move down to the Dow Jones Industrial Average, very interesting to note, under the asset manager and institutions, we can see that almost 4,163 positions were offloaded from shorts, while at the same time, 2,429 positions were added on long positions. Moving over to the Nasdaq, we can see that almost 1,729 positions were added to shorts, while 930 positions were added to long positions. Now, this is very interesting to note, whereby institutions are favoring safer havens compared to the United States denominated stocks. This was very interesting to note today when the markets did open. Most of the stocks are in red. Very worrying in the financial economy right now. This is the S&P 500 change on the daily. If you can move to Nasdaq, same thing. Most of the companies in the United States are down for the day. Tesla down 7.7%, Microsoft, Google. Very worrying. Moving over to the charts, gold did open with a new week opening gap, and we did go to all-time highs at 3,429, currently trading at that price. Now, the dollar index is currently down as expected. We did gap down during Monday's opening price, whereby institutions right now, most of the people are worried about the tariffs, the trade wars that are currently going on with the United States, and we did see the dollar index continuing on its downward trajectory. If you can go to the daily time frame, reset this chart, we can see that the dollar index has been on a decline ever since January 13th. The volatility index has a very big spike on the daily candlestick. Looking at it, we did go up 16.55%, currently trading on the volatility index ever since. Look at the gap between Friday's closing price and Monday's opening price, whereby yes, there is a lot of fear and uncertainty in the markets, whereby we will want to keep a close eye on the volatility index. On the S&P 500, as we have seen on the stock heat map, most of the assets are down. The S&P 500 is down 3.3% on the day. The Nasdaq is down 3.5%. US 33.2. Russell is down 2.2%. Treasuries are down 1.7%. Now moving over to oil. Oil is a very interesting asset because we did see tensions de-escalating in the Middle East, whereby there might be peace talks coming sooner than anticipated, and we'll want to see how oil is going to react. As a result, we did see it gap down. It's down 1.57% for the day, and this is very interesting to note how prices will come back and react on the new week opening gap. Moving over to Bitcoin, we are up 2.3%, which is very good, same as gold, whereby ever since Asian Open, the markets did rally to the upper side. We did see a bit of a correction, but the markets are generally up 2.36% over the day. Moving over to the United States dollar, again is the Chinese one. This will be more of sentiment. We did reject the most recent highs, the all-time highs, 20-year highs that we did see. This was quite a significant high. The last time prices was at 7.3506, was quite a while back. If I can go to the 3-month time frame, the last time prices were back there was back in 2023, and the last time before that was back in 2008, whereby we did see quite a sharp rejection on that region. Now looking at the monthly candlestick, we do have inefficiencies around the opening price at 7.2563, and this brings me back to, I do have quite a few setups coming up in the near future, and I would want you to participate with me, follow with me. I'm not telling you what to do, but I want to show you, I want you to be part of how I execute my trades in the near future. Moving over to Euro USD, we did see on the monthly candlestick we did gain a lot. The monthly candlestick has less than 9 days, 3 hours to go, and we want to see how the candlestick is going to react before the closing of the monthly candlestick. Now looking on the daily time frame, this is the 1 hour time frame, but this line represents the opening price of the day, whereby we did gap to the upper side and the markets did gain at least 1.1%. GBP USD did gain 0.6%. You can see the charts are positively correlated. Moving over to GBP JPY, nothing is happening on the British pound against the Japanese yen, but this might change very soon, especially looking at how price action is forming at the moment. I would want us to go to USD Canadian dollar first, whereby we did see prices tanking to the downside. We did form support around 1.37899, but the markets have rejected, coming back to the opening price of the day, and this will be very impactful. I want you to note this region. Let me mark it. We can see this sort of price action here, and this will play a very vital role in what I'm about to do next. Now USD Swiss franc, currently the Swiss franc is a safe haven compared to the United States dollar. We did see prices in this range for the past 5-6 trading days, and we did break out of that consolidation, meaning could we see more further pushes to the downside? Only one way to find out. Finally, we are going to be looking at New Zealand dollar, US dollar, which is also considered a safe haven compared to the dollar, whereby we did see the markets gap to the upper side, this small gap that opened here, and then the markets rally to the upper side, gaining at least 1.12% for the day. Now, if you have reached this point of the video, I want to congratulate you, because the next video is going to be very important, whereby from what I have just looked at, from what I've just analyzed in the markets, I want to create a portfolio that I want to execute for the next few trading days, ideally up to next week before NFP. If you have reached this point once again in the video, thank you so much. Be blessed. I will see you in the next episode.